markets. Ozan Ozkarel joins us, founding managing partner at Tanto Capital. Ozan, there is a lot of geopolitics happening and a lot of big changes in domestic policy. And this morning, as we thought we'd be talking about the US government shutdown, Japan has swooped in as one of the big stories, the Takaichi trade, the weakness that we've seen in the Japanese currency. But one of the big themes this year has been weakening currencies overall, from the US dollar to others, and now we're seeing it in Japan. Where does that leave Europe? And is there going to be some sort of a headwind coming from the euro remaining one of the stronger currencies?
I think that's going to add on and pile on to the existing problems that EU and companies that are operating within the EU has. What really stands out to me these days is this strange coexistence between euphoria and also fragility at the same time. I mean, we are still riding the AI tech boom, although I suspect that's going to slow down at some stage, maybe next year. At the same time, Europe is stuck in a low growth trap. And this sort of fiscal stimulus program based attitudes around the world are not really going to help Europe on its efforts to scale up, the efforts to catch up to the AI boom and everything else. So I think it's not looking very good for Europe for the moment.
That's fascinating, because to me last week it was investors just searching for a trade that had been left behind, which is why Europe got swept up in some of that momentum. But if we cast our eye forward and try and look at some of the next trades, what do you think they are if you think that AI could be facing some short-term dangers?
I mean, look, it's one of those trades not too dissimilar to gold in the short term, right? That everyone has to pile onto right now. So people and investors are feeling that they're going to miss out if they don't. And that on its own is quite a dangerous mindset to have. I mean, I'm of the view that AI is going to continue to become and dominate our world just because our life is going to be driven by AI. However, there is an element of a momentum trade going on right now in the market, and it doesn't mean that we shouldn't just step back and then maybe take some stock of how expensive things have become. Energy infrastructure is going to be very interesting in the context of AI, as well as a lot of companies and countries try to fund and finance their data center DC projects, and they have to find the energy somehow. So I think those themes are going to play on a much more pronounced manner, and perhaps that's an area where Europe can focus on its investments to become attractive.
I like a lot of what you just said. The euphoria twinned with fragility. I think that really does sum up a lot of the feeling and the drivers at the moment for all of these asset classes. Where is there, and this is the question that I have myself, let alone for our viewers, where is there a safe haven that doesn't look like it's been caught up in a momentum trade?
It's a great question. And I think that if you are looking for a safe haven on a more thematic basis, on a more medium to long-term basis, look no further than food security, water security, because those two areas are going to continue to dominate our life, especially the latter. I mean, we are not talking about it anywhere often as we should do, but it is going to become an area we're going to talk about much more. Now, in the short term, short to medium term, Steve, I mean, the name of the game is volatility. We all know that. And momentum trade is a very strong force in the markets. What I try to take a look at, really, is to try to see past through how the financial markets are reacting to all of this and focus more on the real economy, corporate balance sheets, corporate boards. I mean, we are seeing delays of implementation of significant capex investments because of trade tariffs, because of the uncertainty, because of, by the way, and I think one thing that we are not talking often enough is the inevitable rise in cost of capital, whether it's cost of equity and cost of debt, no matter what central banks actually do, because investors are getting the gist that long-term borrowing, and I mean anything about 10 years of the curve, is just going to have to get repriced. It's very difficult to try to price risk of geopolitical instability, technological changes, social changes, and to have the credibility to think that the politicians will do the right thing. So I think that's going to be an effect.
Okay, you've given us a couple of sectors to look at, plus you've given us the broader macro. Just go back to those couple of sectors as well. I'll pick food security as well, because I mean, you know, it's a lot easier for us to think about the kind of companies. Where does one invest in food security?
It's a great question. I think it depends on which jurisdiction you're looking to invest in. So if you are in North America, you really should be looking at sectors that are innovating, innovation-based, on trying to get more calories out there, because we're just going to need it. If you're based in the Middle East...
Most of us don't need more calories. What we need is less calories in the developed world and more calories in the developing world.
Absolutely. Thank you for kicking on my Monday with my
we live in a world with X billion people, and within that,
that's right,
most people are either overweight or underweight, not the right way. Isn't that a terrible indictment of this planet?
Exactly, it is. And thank you again for reminding me that I have to be on my diet in this Monday morning, starting the trading markets. But joke aside, I think innovation on one end of the spectrum, and I think much more of a friendshoring, nearshoring, and ensuring the supply chains work effectively if you are, say, in the Gulf or in any jurisdiction where the flows of calories, the flows of food security may be impacted by geopolitical turmoil, which I'm pretty sure we're going to see more of. When it comes to water, I think it's much more fundamental. And even though it is a tradable security right now somewhat, I think we're going to have to focus on that. And that could be a very hot geopolitical topic to pick on going into the future.
Let me broaden it back out to the U.S. market overall. Do you see a mismatch between how the equity market has performed and how the underlying economy is performing? Clearly, there are signs of weakness in the economy, but it's important to remember that the U.S. economy is a consumer-led economy, and the bulk of that consumer spending comes from the top part of the income bracket, those who aren't going to be necessarily impacted by some of the weakening employment trends that we're seeing.
I think it's a great question. And I think we see that decoupling happening within the U.S. as well. So that top 1% really is driving the valuation growth in the market, coupled with the fact that investors get the gist that they have to pick their countries, right? Either you're going to bet on U.S. innovation, Chinese innovation, and nothing really much in between. However, the fragility, I think, comes from the increased pressure on household GDP, debt to GDP levels, and the fact that the 99% are finding it more and more difficult to participate in the economy, which in itself is a problem in the medium to long term from a social perspective and should filter into the market at some stage. But again, that balance between euphoria and fear is just palpable right now. So investors just don't want to see this and don't want to acknowledge this, and the momentum trade continues.
It feels like the market has become so short term, and the power of the momentum trade is just, unshakable. Looking at the French market this morning, I don't know if you got a view on France in particular, but it's just notable to me that, the political situation has been well known now for months, and it's certainly been well known since August when we initially had the no confidence vote called. And yet, this morning we're seeing French stocks sell off as if this is new news. What do you make of the market reaction that we're seeing in France?
I just think that traders and investors are being forced to be even more myopic right now than they have done so before, just because there's so much change, Juliana. There's so much change that we have to digest, and we just cannot deal with it. And traders are also human beings that just basically focus on a narrow band perspective, and they just are more and more increasingly focusing on short term, because focusing on the long term doesn't really pay off in the short term. And everyone's compensation cycles are very much tied to how you finish this year. So I think we're going to see more of this continue.
How you finish this month,
Absolutely.
Depending on where you are.
Absolutely. So then it warrants the question, like President Trump said, should companies stop giving quarterly earnings? Perhaps. I think that's an interesting question to pick on.
Let me revisit something else you said around the energy component to the AI story. And this is something I think a lot of investors are focused on. It's become very evident that we may not be able to power some of this enormous technology that is coming our way. How do you play that trade? What is the sound way? I notice utilities have also closed the gap higher in Europe after being somewhat of a laggard. That's obviously got a lot of the green energy components. How do you play the trade?
The real way to play this trade in the medium to long term is to focus on SMRs, so small modular reactors.
Interesting.
And
I'm going to just jump in there. There's a
Sure.
piece in the FT today talking about the unproven business models of these SMRs and the costs associated with them and their energy output compared with the big reactors.
That's
just
right.
thought I'd add that one in there because I think it's interesting.
It's a great point. And if you follow this sector quite carefully, it still is somewhat of a holy grail. Two companies in particular are racing to dominate, GE versus Rolls-Royce. GE is a little bit ahead. But let's face it, all this capacity for DC, for data centers, the real way, the sustainable way that this is going to get powered is going to be nuclear. But nuclear is still a bad word in some circles, and SMR technologies are burdened by the regulatory elements of it. So what do you do with the uranium? Where do you get the uranium? How do you deal with the wastage part of it? So it just cannot be a private sector, on its own. It has to be a public-private sector partnership, and that means regulation. By the way, Canada is quite far ahead in getting there because of its regulatory landscape. So definitely an area that I'm following when it comes to the energy aspect of AI and DCs, but there isn't a simple short-term solution.
Ozan, you always bring some new ideas to the table, and today is no exception. So thank you for joining us around the set. Ozan Azkarol, a founding managing partner at Tanto Capital. Now, we are tracking a few